Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock with news energised by some key American data. First up today, there's been a surprise improvement in the American inflation rate, and that has induced some sharp market reactions. The rise in consumer prices slowed for a fourth month to 7.7% in October from a year ago, the lowest since January, and below forecasts of 8%, and that's down from 8.2% in September. Equity markets have taken off higher, bond markets dived, and the US dollar retreated as risk appetites swelled. Markets are signalling a landscape change on this data, which seems a bit of an overreaction. However, the change from September to October is below 5%, and that indicates recent improvements are better than the year-on-year headline numbers. Core inflation was up even less. Markets are betting the Fed will be pleased, and that the next rate hike from them won't have to be as high as 75 basis points. Markets have now priced in a 50 basis point December hike. Meanwhile, US jobless claims rose marginally last week to 205,000 and taking the number of people on these benefits to 1.26 million. And while that's still near historic lows, it is a noticeable rise and may be an indication that the heat is going out of their tight labour market. Certainly, there are now a stream of daily job cut announcements coming out of the tech sector, and that will probably spread from there. The question is, how fast and how hard? But there are no alarming signs just yet, and clearly today's Wall Street is betting it'll be minor. And China's banks extended 615 billion yuan in new loans in October, down from 2.47 trillion in September, and below market expectations of 800 billion. It was their lowest level in bank loans since December 2017, as credit demand weakened and the economic outlook darkened further, amid persistent pandemic curbs and a deepening property sector debt crisis. Things may not get any better in China. COVID cases continue to surge in Guangzhou, and the daily new case count is approaching the level which Shanghai shut down earlier in the year. In Australia, consumer inflation expectations rose to 6% in November, up from 5.4%, which have been anchored for the past 2 months. In global container freight costs fell faster last week, down 9% in a week to be 70% lower than year-ago levels. It's now well below 5-year averages. Rates out of China fell even faster. However, bulk cargo rates eased higher over the past week. The US Treasury 10-year yield starts today at 3.84% and down a massive 33 basis points from this time yesterday. And the price of gold will open today at $1,750 an ounce. That's up $36 from this time yesterday and back near its early October levels. And oil prices start today a marginal 50 cents firmer than this time yesterday at $86.50 a barrel in the US, while the international Brent price is just still on $93.50 a barrel. And the Kiwi dollar will open at 60 US cents and back up a cent since this time yesterday. Against the Australian dollar, we've slipped slightly to 91.2 Australian cents. Against the euro, we're a bit firm at 59 euro cents. That all means our trade-weighted index starts today at 69.5 and 30 basis points higher than this time yesterday. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston.